Hey everyone, thanks for coming for this panel. So prop trading is only, I mean, the way we know it is only a few years old, except from some selected companies that are more veteran. But it seems that every day the reality is changing and the business model is changing. And with our four great panelists, we'll try to understand better where we stand. So maybe we could start with a short introduction of each one of you, starting from the tallest guy, Christian. Maybe you can tell us a little bit about yourself, and maybe at the end, if you could define in one word, what do you think the state of prop is in 2026? If you could choose one word.
All right. Yeah, thanks, Jam, first of all, for the invitation. Yeah, my background is from CFD brokers. I've worked for the last 10 years for brands like Pepperstone, Admiral Markets, eToro, and started to pay attention to prop about a year ago when I saw the hype and so many new brands popping up everywhere. And if I would describe how the industry is at the moment, I would say it's hype. I think that's what it's describing at the moment.
Gail.
Hi, I'm Gil Ben-Hur. I'm the founder of the Fivers. This year we're celebrating a decade in the space, and also founder of the Fivers of Trader Pool, which is the first and only for now the real U.S. stocks prop firm, and probably a founder of a few more things that will be revealed in the upcoming year. What's the prop state this year for the next year? I think it's continuing the growth and building the trust with our clients and the trust of the industry, and I believe that there's going to be much more collaboration between the mother industry, the CFD industry, and the prop firms. We'll see a lot of collaboration on that.
These was 30 words, but it's acceptable.
Hi, my name is Alexis Droussiotis. I'm the head of the Matchshare platform. We're a technology and liquidity platform. We offer our services to FX and prop firms. Now, where do I see the state in 2026? I think you mentioned it very well, Gil. Building trust, because there's been, so many firms shutting down where the ones there need to build the trust if they haven't built it already.
Brian.
Hi, everybody. I'm Brian. I've been in the CFD industry since the late 90s. I was with CMC Markets for about 10 years and with FXCM for a long time too. And I've had several prop firms over the course of the last 3 years, some of them successful, some of them not successful. And if you ask me where prop is, I would say it's only just starting, and it is massive. If I said to you last month that the total number of purchased challenges was in excess of $150 million, would you believe me? Well, it was. Okay, so there you go.
Okay. So Brian, when we were preparing for this panel, you said something rather striking, that prop is not finished, but if you're coming into prop now, you are finished. Could you explain a little bit, elaborate, what did you mean?
There's a cost of admission to every industry. Now, for CFDs, I think everybody here is firmly aware of what the cost of admissions are, although it's cheaper slightly because of the acceptance of offshore jurisdictions and what have you. If you started a prop firm 2.5, 3 years ago, you could simply set up with, a front end and some form of dashboard. Now, I think the cost of entry are significant, and the reason for that is that there's been so many people who've come in and left a bad taste in people's mouths, that the cost of building trust is something that people just say, no, people will come, people will buy my challenges. They won't, period. If you're not on 3 or 4 affiliate sites, if you don't have a massive following on Trustpilot, if you don't have your own Discord server with people singing your praises, if you don't have thousands and thousands of records of confirmed payouts, it's not happening.
It's not happening. Gil, from your experience, what is are the turnkey solutions still relevant today?
I think turnkey solutions are okay. There's a lot of space for new companies that come and propose new ideas to this industry. When I mentioned before that I think the industry need to be more mature and growing, I would expect that a new company will not just take more of the same and embrace technology and do something that many other companies are doing, but also propose new values, new ideas, and new models for being funded.
But as for entry barrier, is the bed what's the entry barrier today? Maybe not in dollars, but what does it take?
Yeah, so it's an illusion that if you take technology and you have a turnkey solution, that the entry of barrier is fast and considerably cheap, but it's not, because you really have to. You're diving into a very saturated business, and yeah, and in order to outstand, you need to present something new, and that's the big deal.
Christian, in terms of marketing, what are we looking at?
Yeah, I think we have a lot of brands offering all the same. You know, there's not a lot of, especially new prop trading firms that use turnkey solutions. They completely overlook the marketing side of things. They buy the technology, they discuss CRM systems, platforms, liquidity, but marketing is never really part of the discussion. And as Gil mentioned earlier as well, I think if you don't have your own audience, or if you have some kind of expertise in the marketing area, I think you're doomed from the start, because nobody will come to your website, nobody will trade with you, especially considering that you have already, let's say, up to 10 brands which are very established. And why should affiliates and media partners then start promoting your brand? So yeah, building trust, doing marketing, I think it's overlooked by many people who are getting new into prop. And yeah, it's not as easy as just buying some technology and then people will start using it somehow magically.
What's the reality now with affiliates? I mean, what does it take? Affiliates charge a lot, right, on the rev share side today.
Yeah, I think affiliates, you know, they're in a super powerful situation at the moment because everyone is depending on them. And I mean, there's like a couple of names in the industry, they control almost the entire flow. And to get on there, it's very, very challenging and very, very pricey as well. And also, I think somehow the mind shift from or the mindset of prop trading firms, they think they can give away a few coupons and a few free challenges, and somehow everyone is getting excited. And I think the opposite is true. Affiliates are demanding more and more. They know their value very good, so they ask for very high commissions. I've spoken to some affiliates recently, and they ask for 20% straight away, you know, revenue share up to 50%, 70%. And you also don't understand what's the revenue or what's the business model behind these prop firms. Are they really looking to make money from prop trading? Or is it just a way for them to generate leads and maybe cross them into CFDs or into other financial products? So I think this is like a huge challenge for new prop trading firms. And if you don't have this substantial budget, I think, yeah, it's not worth getting into it unless you have the audience or the expertise. You are some kind of marketing genius, then maybe yes. Or you have some product innovation that could be a solution if you offer something that others don't offer. That could be an education angle. That could be another platform. A lot of firms are getting into TradingView, for example. But yeah, if you just try to buy technology through a tech provider, I think you will have a hard time in 2026.
Alexis, in your eyes, what is the barrier today from tech point of view to enter the prop arena?
Look, I would first categorize props into three different tiers, right? So the first tier are let's say the top 20 to 25 prop firms, which they build their own technology. So they build their own CRM, their own RMS, their own tools. Why? Because they can, and they have a specific vision in how they want to do this, right? So the second tier would be prop firms that they will not build their own technology. They have an idea of what tools they want to use. So for them, what is the best CRM in combination with what RMS, with what tools? And then the third tier would be the small white labels where we're looking at a turnkey solution, as you mentioned before. So depending on each of the tiers, there's a different, let's say, barrier to entry. There's a different one, two or three.
I understand. I'd like to move on to something that I think today is acceptable as a main reason for many prop firms to shut down or disappear, which is, of course, risk. We know that risk management is vital to all the trading process, and especially in prop firms. Gil, how do you see that? I know that in the Fivers, you emphasize a lot. It's in your core, right? The whole risk management landscape.
Risk is core operation in what we do every day. The prop firm business model as it is today, it's statistical, and you need to mitigate the risk by a lot of means, specifically data. The main challenge is how to filter out the toxic players and still provide good solution for good terms for what we call the genuine traders, the ones that really want to participate trading as genuine trader. And we've created a mindset project in the company that says that risk is everywhere. Because every department in the company can contribute to mitigate risk, even marketing. If you outreach to clients that are more genuine, if you provide content that attract genuine traders, therefore you lower the density of the toxic players, and then you can lower the risk margin in the operation.
Toxicity is a word I hear a lot lately. That toxicity, the industry is very toxic, also because of scammers, but also because of all kinds of techniques that are used against the prop firms. Would anyone like to elaborate on that?
I can. Well, I think every business has risk, not just trading businesses. But specifically in our situation where the prop firm has no regulation and no higher governments, the standards, and because of competition, the standards are always going down, pricing are going down, and the offering for clients become more populistic. That creates some situation that sophisticated traders can look at our programs and they can win them on the statistical level. And so there's a growing phenomena where we see a lot of groups, especially in Asia or in third world countries, that they gather together. I don't know where, but they share information and they go and do collaborative operation against companies. And I think there's two reasons for that. One is because pricing are going very low, and they can afford this, and they find the arbitrage over there. And the second thing is because companies are offering more of the same. There's so many companies to try and abuse, because there's a single standard that if a system works on one company, it will work on a different company. So that's what's happening.
Brian, how should prop firms deal with risk?
That is the $1 million question, and I'm sure it's $1 million every day for some of them. In practical reality, look, I think the entire industry started with people who probably didn't come from a traditional type CFD background, and they kind of made it up as they went along. And some of them, and I'm being very general here, probably take the view that the risk of payouts, how they pay out their clients who are successful in trading, is just the cost of doing business. Say, for example, I wrote $100,000 of business this month. That is, I sold $100,000 worth of challenges and $50,000 were the payouts, then I'm still way ahead. I would like to think that with broker props, this is different, and with standalone props, that the level of maturity is changing and that they are employing some of you good people out there who sell risk management systems and or outsource dealing teams, etc., to handle this. And that it's like every market, it just matures. And that people realize, and obviously the biggest example is FTMO's purchase of Oanda. I mean, again, it doesn't take a genius to figure out who's the dog and who's the tail. That FTMO is. Thought that was aimed at me. I thought I was about to get shot at. It can happen. Maybe I should stop talking.
That's the risk of being in a conference.
That's the risk of being
the
in the
risk.
spotlight. Can you hear me? Okay. So my final point is that risk is prop firms are maturing, and that risk is or will be handled in a more, I guess, organized fashion.
Mm-hmm. Alexis, what can tech offer now in 2026 to avoid scamming, to reduce scamming, to reduce the organized attacks that Gil was describing, and we all know?
Okay, so first let's distinguish the difference between a trading platform and the RMS, because it's actually the RMS that checks for abuses and not the trading platform itself. Now, from the trading platform side, we provide the raw data, so the logins, the IP addresses, event sequences, all the trades to the RMS, so the RMS can actually do its job and find all these abuses, right? Now, from our side, for clients of ours that are using our funded phase liquidity, that's where we have our internal RMS, where we can check for latency arbitrage, crowd account hedging, news trading, and things like this. So not the trading platform itself, but the RMS. So touching a bit on the funded phase liquidity. So when a trader goes to the funded phase, we would open a one-to-one hedge account on our side, where we would mimic and, let's say, copy the same configuration as the challenge on the funded phase. That's the first. Now, we would do a direct payout to the prop firm, and the prop firm then to the trader. And there is no LP capital requirements. So that means you can have your costs as low as possible. Now, what is the actual cost for this funded phase liquidity is between 1.5% and 2.5% of the initial balance of the challenge. So why 1.5 to 2.5? Because it depends on the daily drawdown, the max drawdown, and the profit split. So what do our clients receive? One is the use of our internal RMS. So that would be one way to reduce the risk of being abused. And the second is being able to cap your payouts, because we're also taking risk on our side.
Yeah, I must tell you, as an outside spectator, that it seems that the abusers are quite up to date with the new developments, that they find solutions all the time how to bypass.
They are. That's why it has to be done directly from the RMS.
Okay. I see we don't have a lot of time, so I'm going to jump into the next one. I'd like to talk a little bit about the differences between CFDs trading in props and futures. So in a way, Alexis, since Mida quotes pulled the rug from the prop firms, the futures trading, correct me if I'm wrong, has gained more popularity. How do you see that? Is it going to continue?
Look, I'll try and keep it short just for the rest as well. Now, when MetaCodes, let's say, pulled out, what happened was, and what I'm seeing continuing is that prop firms had to use alternative trading platforms. And the benefit out of this was that they actually understood the USPs of other trading platforms as well. So, for example, something that we discussed with a client of ours, because prop traders are younger demographic, they like the trading platform that was easier, it removed the learning curve, it was more mobile friendly. So they realized that by connecting multiple trading platforms, they can actually increase their audience. That means sell more challenges as well. So where do I see it going? Prop firms understanding that using a few trading platforms could be to their benefit rather than focusing on just one.
Are you also seeing this, Gil, in the Fivers, the rush to futures in the States, I think?
Well, first, the incident with MetaCourts was very good for us. A lot of companies could not kept servicing MetaCourts for their clients, and I still believe that I love Alex, but MetaQuote is still the game, the game changer. It's the deal. Sorry, the deal breaker.
Deal breaker.
And when they left, we got a lot of new clients just because of that. And then the situation in the US where US clients could not use MetaQuotes any longer and they need to use alternative. We got an email once saying that it is the worst thing to be an American trader because the regulator there just make it a very bad experience for American traders to be traders. For some reason, they're not protecting them.
Maybe not for long.
They're just making them hard lives. So American traders they move to futures because it's easier for them. It's more in their native language, I would say, and we're seeing a growing companies that offering futures.
Okay, I'd like to wrap up before we have 2 or 3 minutes for questions with something that's I don't think always discussed in panels, which is what is the value proposition of prop trading to trading? I mean, is it something that what's the value for traders? Maybe each one of you can wrap up with what do you think is the like
I guess
the benefit?
right. For the average retail trader, it's obvious. It's the low cost of entry. You know, any person can rock up with £100 or $1,000, open a CFD account, and then it's over before it begins. Whereas at least with a prop account for $500, $200, whatever it is, they at least have a fighting opportunity to be longer on the platform, be exposed to like to news events, live market events, understand the essences of entry, you know, market entry, stop losses, order types, stuff like that. So maybe the experience could be seen to be more educational, and they have guardrails to a degree. And most importantly, and this is often overlooked, and many CFD brokers have tried to do this, is to create a sense of community. I'd recommend everybody here to go to Discord and go to the top 5 prop firms and see the activity on the Discord servers. It is quite profound, and it's helpful. It's a shared experience. So, as a new entrant, new market entrant to the industry, I think it's just more. I hate the word inclusive, but it just is. Okay.
Alexis, you want to comment?
I think I'll just agree with you.
Yeah.
Yeah, I would
Christian.
say overall for beginners, it's also a less painful experience if you start trading as a prop trader compared to as a CFD trader, where you lose large capital in the first couple of weeks. That's usually the experience of someone who's new to trading. So with prop trading, I think it can be a learning curve, which is which is easier and less pricey as well.
Okay, I'll put my. I think I have one, two changes. So I think what's so great about prop trading is the psychological aspect with trading with the prop firm's actual money and the such a small entry level. So we're looking at $50 to $100 to be able, where if they were trading with their own money on CFD, they would need to do at least 10 and 15K. So that barrier to entry that is so thin, and in so many countries, many people even have it as a way of life, how to escape inflation in their local currencies. So yes, I think the concept is just amazing.
Gil?
I think we can all see it's a very straightforward value for the traders. What they get from a prop firm, it's a low cost. They have experience. They get community. They get everything they don't get at brokers, maybe because of regulation. But the greatest contribution for that prop firms brought to the is that the prop firm become the gate, the opening of the funnel for masses of new traders into this retail trading ecosystem. What I mean is that we're seeing numbers, and when we're sharing our numbers with brokers, they are just being amazed by the numbers. And I can tell you, Kevin from Forex Factory is a good friend of mine, and he shared with me data, and he told me that in the past years and months, they're seeing amazing growth in their networks. And the reason for that is there's so many people now getting the opportunity to participate in the markets game where they never had the opportunity. They never had the time, the money, the effort, the resources to start it. And the prop firm is the opening gate for that. And it's by multiples.
Great. So we have time for 1 or 2 questions. Anyone would like to ask anything? Yes, please. Just a second with Mick.
Would you agree that prop firms will take over of the brokers? Brokers will disappear and we have prop firms take over?
No.
Okay, I just want to know if...
Yes.
And agree with
Yes.
you, but I want to know what is your opinion
I
about it.
secretly hope so. No, of course not. You will find that most of the more prolific prop firms have a broking license or are owned by a broker. What I would argue, and it's something we probably could have got to, is that every broker should be a prop. Should every prop be a broker? Probably not. But every broker should have a prop offering, whether they do that in whatever jurisdiction they can persuade that compliance officer to allow them. I would say, leave here, go home and do it. And if you need help, call me. How about that for a shameless plug?
You know, television didn't kill the radio star, they say, and it's true. It's only the corona killed the movie industry, but we still have movies and cinemas. The old guys, they stay here. And I think the prop firms are just bringing many more masses of new clients, and they will eventually grow up to be broker clients. I think we contribute to this ecosystem quite a lot in a very beneficial way, and this is why I foresee that there's going to be a lot of good collaboration between the prop firms and the mother industry, as I call it, the brokers.
Okay, guys, thanks very much. It was really interesting. Christian, Gil, Alexis, and Brian. Have a great rest of the summit.
Thank you.